Thank you so much, Jessica, for sharing your story with us. It reminds me about why I got into technology in the first place. Of course, growing up as a Middle Eastern immigrant in the United States, there was only really one career path choice for us, and that was medicine. Something I always thought I wanted to be a doctor, and I finished all the schooling. But sometime in the mid-90s, it dawned on me that really technology is going to be an enabler of even more impact than medicine alone. And of course, the combination, as we see here, is very inspiring. As Khalfan had alluded to earlier, we want to be pushing the envelope on the types of technology that we're incubating here in the UAE and the region. It's great that we're doing all the types of startups that we are, but we want to start pushing that envelope now. So for myself, it was a matter of how can we have an outsized impact on a region that had its golden era many years ago, and what I believe is on the dawn of having it again very soon. So I left my career at Google to come out to the Middle East, didn't live here before, just to try to do what I could with many of the people who knew here, and you've heard from Fadi and many of the pioneers who really started many years before us, to see what we could do about furthering the cause of entrepreneurship, which is building startups, technology startups, and also the investment component through venture capital. I truly believe that venture capital is one of the most efficient ways to deploy capital to make change in social economic status and even geopolitics. Next slide, please. As was mentioned earlier, one of the reasons that we started the Dubai Future District Fund was because we saw both an opportunity and a threat. The vision was that we need to build for the future economy, for humanity, and for a livelihood of businesses and enterprises that will do good. We needed to add more capital because for all the accolades, for all the number one position that Dubai has had over the years, we're at threat of losing it. Not that that's the only metric we look at, but it is a metric. We sit on the best place to work, the best place to live, and have been number one in terms of the number of deals and the number of dollars that have been deployed into the ecosystem for every quarter that I can remember. But now it's time for the Dubai government to actually put capital forward, support those VC funds. One of them myself, many of you here in the room. It was a real struggle to get every dollar in to a fund so that we can invest in those great founders. But also to push the envelope, we need to be able to do direct investments into those technologies that are not getting that much support. And there's for good reasons. Venture capital funds are structured as 10-year funds. A lot of the deeper technologies have longer R&D cycles, higher CapEx, and really, that's what the role that the government should be playing in filling the gap in those areas until the private sector can fill it on its own. It was the case 40, 50 years ago in the United States, 30, 40 years ago in China, and in the last 10 years, many, many countries around the world have really put incentives in place and efforts in place to provide more capital to their ecosystems. Next slide, please. When we were designing the fund and trying to think of whether we're performance-based or impact-based or really what is the role here, we decided on a combination of those things. All of those things were very important to us. So of course we want to have impact. What does that mean? That means affecting the lives of millions of people in a positive way, not just here in the UAE, but what we consider our wider neighborhood. It also means that we're impacting the way that business is done for thousands of enterprises, making them avoid obsolescence and stay with the times and be modern and be best in class. And third, we have an emerging nascent ecosystem that really didn't have decades or several recessions to learn from. We're only 10, 15 years old as an ecosystem. And so we wanted to put a lighthouse out there and try to be a thought leader for both the governance, the ESG, SDGs, the whole reason, the culture, the mindset of why we're doing all of this in the first place. For me, in the mid-90s, it wasn't about becoming famous or making a lot of money. It was about the impact that technology can have, that you can build businesses that affect a lot more people a lot faster using software. Next slide, please. And so this fund that was established really upon the leadership of Sheikh Mohammed, and then launched in November 2021 by Sheikh Maktoum, and the DIFC and Dubai Future Foundation, to get together and to put a plan together and to get it executed and launched. Many of you know, especially if you've seen the history over the last 10 years, it's not an easy feat. Now we're up and running, alhamdulillah. We've been a year and a half making investments, and I'll talk about that in a minute. But we're also at a turning point. The operations are set, the governance is set. Now we're inviting all of Dubai Inc., and eventually I'll talk about that as well, to join us on this effort together. Why? Because together we can create a much more powerful value creation flywheel if the private sector and the public sector are working together. In terms of capital leverage, we have neighbors on both sides that 20, 30, 40 times declared what we're starting with, but it's a great start and we're already moving very fast. Not that this was a metric we were looking for, but we became one of the most active investors in the UAE last year, just in our first year of operations. So we invited you all here today to explain a little bit about the fund. We get a lot of questions. Is this real? Is it happening? What are you guys doing? What's it about? I want to just pull the curtains back a little bit. Next slide, please. So I'll talk a little bit about the programs and why I feel lucky, and I think we all as an ecosystem are very lucky to have the DIFC and Dubai Future Foundation as our anchors. So we have one entity that has a regulator, it has a free zone, it has several programs that are catering to the very early stage startups, as Christian mentioned, from the FinTech Hive to Accelerate Her and the FinTech Accelerator program. And there's new things that we just launched that are not listed on here yet, like the Venture Studio platform and Launchpad. And Dubai Future Foundation, even though it's a very young organization and non-commercial, has been putting a lot of effort into bringing ideas together, bringing companies from outside the UAE to the UAE, and bringing those Dubai governments around them through the Dubai Future Accelerator programs, and many other programs that they are doing to enhance the tech talent base for the UAE. So we're very fortunate to have them as the anchor investors and shareholders of the fund. Next slide, please. When we were devising the strategy, and for any of you who have been in venture, usually you're defining your thesis based on 3 pillars. So we look at geography, stage, and sector. We have a very comprehensive strategy, given we're a government-backed fund and have a big eye on the future. So in terms of geography, we're starting with the UAE, and then we'll slowly start to move out to what we consider our neighborhood or the larger region with MENAPT, and then eventually MEASA, and we are looking at even international global entities as well. But we'll take our time and stage it to get to that. On the type of allocation that we're doing 50% investments into VC funds because somebody's got to support them so that they can do the great work that they've been doing. And we have 3 kinds of funds that we invest in. One is the incumbent regional funds that Fadi mentioned a few of them already. Really, those are the guys that have been doing a lot of the work over the last few years. They're on their 2nd, 3rd, 4th fund by now, and have been really their home has been in Dubai, and we want to support those types of funds. But then again, to provide plurality and optionality for founders, we want more diverse types of funds as well. So we're supporting new and emerging fund managers, that's first-time fund managers or single GPs or micro funds that have a different thesis to them. This provides more options to founders and more plurality to our market. And third, we're investing in international funds that are making Dubai a place where they're set up, they're present and investing. And we're seeing a massive increase of interest from international funds just over the last couple years. This is a different tone than what we have heard over the last 30, 40 years, which is people parachuting into the Middle East to grab money and go back out. That's no longer the conversation. The conversation is about what are you doing here? What substance are you doing here? And believe it or not, they're already coming to us with that conversation. We don't have to say anything anymore. Part of it is the post-pandemic Dubai and UAE that Fadi mentioned. Everybody has heard what the UAE has done during COVID, how its healthcare situation is, how the supply chains are. And really, for me, coming from the US, growing up there, I've never seen a government listen so carefully, take action so fast, and really talk about the future of its people as much as I've seen here. In terms of the sectors that we're looking at, it's pretty wide, so bear with me. But we've defined it into 2 thematic pillars, and we think they're very exciting. The first one is a really foundational element of business, which is what we call future finance. Future of finance, of course, entails the 15 to 20 subsectors of fintech. It includes regtech, legal tech, horizontal themes like financial inclusion and embedded finance, and even the finance side of Web3, if we find anything. That was a joke. The other pillar we look at really is a catch-all in a sense, and we don't actually define what we call future economies by the underlying sectors specifically, but instead we look at it as what do global economies look like between now and 2050? In that 30-year horizon, there's many reports out there you can look at. There are many predictors of what the world will look like and the drivers of that change and what will cause them. And believe it or not, a lot of the SDGs that we're all familiar with are very much in line with what those changes are going to be, and in line with how we think about the technologies that we need to invest in to make humanity better, not just to make money. So we look at things like the future of food. To us, the future of food is not about food delivery, although that's a great product and service. We needed it in a market that was a greenfield. But now it's our job to take things to the next level. So what are we going to do about food sustainability and the lack of food in the future on the whole planet? Those types of technologies are more interesting. Some of it's agritech or aquaponics or vertical farming. When we look at future of health, it's not necessarily a web portal where you can find information about health, but rather things like precision medicine, skin grafting, lab-grown tissue, right? Therapeutics that are using genetic code or CRISPR, those types of things that are really taking healthcare to the next level, or using our augmented reality to do surgeries in remote countries. These are things where we're really taking the deeper side of future technologies and applying it to these industries. Some of these things, as I mentioned, require longer R&D cycles and higher capex than a typical startup. And that's where we really have to come together to support. Not only in terms of capital, but if you want to bring startups here, or IP and the tech talent, which, by the way, for every geopolitical thing that happens around us, the UAE continues to seem to benefit from that. Talent is moving here, IP is moving here, but what are we collectively going to do about that to support them? Now, what I've seen is that if we just provide capital, it's not long-term enough. They will use the capital or certain incentives, and then they'll go on their way and chase the next one. Not talking about whether that's the right thing for them on the roadmap, but that's what happens. But instead, what we can do as Dubai, collectively, private and public sector, not only participate together from a capital perspective so that we all have interest in the same goals, but then when that startup comes here and says, I have a certain technology and I want to build it from the UAE, that we then can plug them into gainful business development. That will keep them here for the long term. And you'll hear us continuously talk about this value creation flywheel that we are aiming to create with all of your help. And that's the beginning of what this fund will be. Next slide, please. In case you're not familiar, and we understand, this is a market that is moving very quickly, and a lot of times we are a tiny little bubble among, business communities. Venture capital, as I mentioned, to me, is one of the most efficient ways to deploy capital to make socioeconomic change, if done right. Of course, with the proper governance, with the right responsibilities. But we have to do 2 things. We have to find those entrepreneurs, make sure they're building the right kinds of companies in the right ways, but also be able to provide the right kind of capital at each stage for each type of business. And of course, many of the small businesses that you've seen around are great businesses for the economy, but not necessarily venture capital-backed businesses. So we look for technology-based startups, either the product or the distribution channel is based on technology. That affords it hyperscale and requires an outside injection of capital so that it can build faster than a normal company. And so it does that using that technology. Next slide, please. This is the core and the essence of really where we want to take the fund over the next few years, and welcome all of you to be a part of it with us. Because together, we can do a lot more things if the public and private sector are together, if we concentrate our efforts in one institutional platform, and create these value creation network effects that will then feed back into the top again. So if you're an investor in the fund, and we're helping startups connect to RTA or DHA or you name it, they're going to stay here and continue to grow, and they're going to have this unfair advantage because it's a flywheel. So we're investing in them, we're adding business to them that's going to keep them here, bring more talent here. Those people, they will grow their companies, eventually exit and get liquidity, and then eventually start new businesses here. So this is a flywheel that we haven't really tapped into yet in Dubai. But believe it or not, Dubai Inc. alone, which is just the government authorities, the government-related entities or quasi-government entities, many of you which you're a part of, have followed sort of the birth of Dubai, which is very entrepreneurial, as we mentioned. We mentioned that everybody is very enterprising, go and do your thing and compete, and whoever can perform better was the perfect strategy for Dubai. It's how 95% of our GDP is not reliant on fossil fuels and extremely diversified. However, in my opinion, we're reaching a point now where many of those entities are profitable, many of them are going public very successfully, and it's time to harvest. What I mean by that is it's time for Dubai Inc. entities to then reverse course in a way where we all come together on a single platform. Why? Because neighbors on either side of us have $2 to $10 billion declared for their startup ecosystems, and of course, they need to build ecosystems from scratch. On the other hand, Dubai has the leading position, and we need to defend that position. So together, rather than having a bunch of little funds everywhere doing different things, we combine together as one. Next slide, please. So as Khalfan had mentioned, we're performance-driven. Now I just want to take a second to explain what that means to us. What does it mean to be performance-driven? So you could be performance-driven and say, grow at all costs, profit at all costs, squeeze every person in front of you on your way there. That's not what we mean. For us, if you can solve problems for millions of people or thousands of enterprises, you create value, right? If you create value, you generate profits. If you generate profits, you perform. For us, the means to get there is more important than the end. We want to do it the right way. It's why ESG has become an integral part of this fund strategy from day one. Our shareholders have been great examples in pushing that agenda forward with us. We've seen all the stories around the world. Those hype cycles, I've been in it for 26 years. Those hype cycles are not the core of our industry. Nobody ever told me since the 90s, grow at all costs. I never even heard that line until a few years ago. And all I can think that they're thinking is those outsiders trying to mimic the mindset and culture of venture capital. It was not meant to be that way. It was meant to push technologies that could not have even gotten off the ground. Those researchers could not have commercialized their IP had outside money not come in. It really had a virtuous core to it. And that's what we want to bring back here, because we're still a new ecosystem as a whole, but we risk falling into those same kinds of FOMO and sort of surface level traps. So for us, we want to diversify GDP because it is a powerful tool for that, both SMEs and startups. We want to create jobs, and I'll give you some numbers after a while on what we're forecasting this fund alone can do with your help. And we want to make sure that the private and public sector are working together under good governance in an institutional way. Next slide, please. So our fund has started with this 1 billion dirhams anchored commitment, as I mentioned. We want to take that this year, we're starting this process already, to add another $300 million from Dubai Inc. So you can see how the story I'm saying will start to build from here. So we have two of the greatest Dubai Inc. shareholders already. Great start. It got us off the ground in a way that wasn't possible before that. And now to invite the rest of Dubai Inc. to come into the fund, and that way we create and establish a web of connectivity between us, tying us together. Because honestly, no matter how much you talk to somebody, you say, yeah, we should work together, you shake hands, you walk away, you forget to call them. It happens with us co-investors all the time. Let's co-invest together, and then people forget. So this will tie us in at the top level. But then what our team has already done, we've talked to 40 or so of these Dubai Inc. entities, many of you here, thank you for coming. We've followed up that meeting with the next meeting of needs assessments. So imagine, we're breaking down every Dubai Inc. entity's assets, values, technologies, and mapping all of it together to see what are we really sitting on here. It turns out we're sitting on pharma companies, logistics companies, airlines, facilities, real estate, construction, healthcare, you name it. Every discipline you can think of, we're already sitting on really, really massive assets, but really not talking to each other and not directed to help startups yet. So I think that's the first part of our strategy to get us to, that 300 million will get us to 500 million in AUM. This year is the plan. And then we'll go on to our second strategy, another 300 million from the private sector. And fingers crossed, this will be against a long-term incentive, like the precedent has existed in many other countries in the world who have successfully pulled in private sector money into venture capital in their countries through some kind of long-term incentive program. Hint, hint, taxes are coming, but no promises yet. So that'll take us to 800 million. Now, the final 20% on a rolling basis, which in this case, the first 20% would get us to $1 billion AUM. That final 20%, we want to open it up to qualified retail investors. That's you and I. We want to put $50,000 of our own money onto the platform, invest with Dubai in Dubai's index, because if we do our job right, we have all the best funds under our platform and all the best technology startups, diversified, as I mentioned, across sectors and stages. Actually, I missed the stages part. So we employed a three-pronged strategy. We call Anchor, Build, and Catalyze, ABC. Anchor is the strategy of fund of funds, where we anchor the funds. We invest in those funds so they can do the great work that they're doing. Build is the very early stage pre-seed and seed stage programs. Those are the programs I mentioned of our anchors and many of our friends here in Dubai who are running those very early stage incubation level programs, and we want to support those companies. And then Catalyze. Catalyze takes Series A plus investments and invests in those to keep those larger companies here as they scale up. So that covers the various about 5 stages for us. Now, this final 20%, we want to open it up to qualified retail investors, as I mentioned. And the best way we can think of using technology, and another first of the fund, there are several we haven't mentioned, but just the fact that we're an early stage venture evergreen fund that's backed by the government is a first. The fact that we are performance driven in that we pay a profit share to the team is a first. The fact that we are going to open up 20% of the fund on a rolling basis to qualified retail investors. We're going to do that through a white label tokenization platform. Now, before you roll your eyes, these are not utility tokens. This is not, the tokens that trade, and all the volatility. These are security tokens. These just mimic a paper share, right? And that's all a precursor to eventually, in 10 to 15 years down the line, when the fund hopefully is swimming in what we call profit or carry, that we will list the fund and it will truly become a public fund. And then provide liquidity back to all the different types of shareholders that we have. So this is meant to be built to be your fund, both private sector, the government, and individuals. Next slide, please. The reason we're stopping at that $1 billion mark is because, by our estimates, for all the investments that we'll do, and we do these in chunks of 3 years. So while it's an evergreen fund, we still had to have a mental timeline of how we're going to deploy that capital. So we have these 3-year cohorts, and every 2 cohorts, we call a 6-year period. Now, when the first cohort starts to return, which we estimate a 1x return on the fund within 7 years, that's market rate for private funds. And we estimate a 3x return by the 12th or 13th year. Again, market rate. We think with the combination of deploying every 3 years in these cycles under an evergreen structure where we have the patience as a government fund where forever is our timeline to hold on to assets longer than a private VC has to when they have to liquidate those assets because the fund is closing. So it's one of the strategic reasons we've chosen an evergreen structure for this. We can hold on to public equities after a company IPOs. We can continue to hold on to shares way longer than the typical 10-year period, because really we're not here to flip a quick buck. Really long-term sustained growth, which is starting to become, thankfully, a conversation globally, that venture capital has a responsibility and that is meant to be here for long-term growth. So for us, we are aiming for a 3.4x return cash on cash for every cohort, which is about where you need to hit, the benchmark you need to hit to outperform every other asset class. Next slide, please. This is just to give you a sense of the investments we've already made to date. It's been about 14, 15 months of investments so far. We've made 10 investments directly into startups, and you can see the details of them here. And 6 funds we've already concluded the investment process for and have deployed capital into. We're very proud of the process that we've done. I mean, we looked at maybe 2,500 companies and 50 plus funds alone just to get to this. But it also shows the maturity of the ecosystem here. A few years ago, there wouldn't have been 100 and something funds for us to narrow down to the 50 to look at to eventually select, 5 to 10 of them. But the market is moving extremely fast, and we're thankful for that. I want to give an example of a couple of these startups that we have invested in to give you a sense of why, as a government fund, we are backing startups directly. So take a look at Finflix, the first one on here. This is a company that is a blend between finance and HR tech, where it's taking expat pensions in the UAE and making them much more modern and like you might be used to in a Western country. For example, a pension here, typical end-of-service gratuity, doesn't get invested while it's sitting there. The employer may not have to escrow the money or there's no conditions for them to reserve that money for you. And we've seen some very big company failures of bankruptcy where 20 years of pension just wiped out. I think that's criminal. And so although this is a software-based company, not too dissimilar to companies that exist in other parts of the world, for us, the impact that it can have on millions of people's lives is very important. So and if you can solve those people's problems, as I mentioned, you create value. I want to give another example of a company, just the second one here, Zest. And I'm just picking them in order just because it's easy. But Zest, for any of you investors in the room, I think it's something you'll appreciate. We always had in venture capital this issue of liquidity. It's a 10-year lockup, blind pool. Many people may have knocked on your doors, Fadi or myself or Danny, saying, hey, invest in this asset class, invest in this fund. And you say, you know what? I put my money with you. I don't know what you're going to invest in, and you're going to somehow give it back to me 10 years later. So it caused a little friction for us to convert many of those types of investors into investors and funds. What we're doing with Zest is providing a secondaries platform for both founders, GPs or the fund managers, LPs, those who are investing in those funds, and very importantly, the employees of those startups. So if you've ever been offered a job at a startup, they'll offer you a cash position and typically some equity. If you're in a new emerging market, you don't value the equity because you've never really seen that cycle turn over. So we want to start to show, Kareem was a great example, really woke a lot of people up, that the employees were actually becoming wealthier because of the exit. So we want to start to show that. And Zest is being able to provide liquidity to vested equity for founders, employees, the ESOP that employees are getting, and then, of course, for the main two institutional players, which is the GPs and LPs. We believe that this can impact the entire region in a positive way and provide much more liquidity. That liquidity gets recycled over and over. So, for example, if you're an angel investor and you invest in a startup and you waited 5 years, but it still hasn't exited because we have a longer gestation period here than normal markets. It's just the nature of being new. Well, then you can get out at the 5th year, halftime. Somebody else might want to buy your shares at a discount and ride the next half of the wave. That's a very common practice in other markets. We want to bring that here. So I'll stop with those examples, and we can move to the next slide. I'll tell you a little bit about The next slide, please. Some of our metrics just in the year or last year to date. So we have invested a total or committed a total of $28 million. That's some direct investments and our first commitments to funds. We plan to continuously increase this amount over the years, but it was a great first year, I think, for where we started. That fund, those investments can enable liquidity of $500 million. What I mean by that is that the funds that we invested in alone, their AUM collectively reached $500 million just from those 6 funds. So you can see how every ticket is a catalyst, not that we were the only enabler, there are many others. But every ticket matters, and it increases the pool of funding for founders and the dry powder in the market. You may have heard, if you've been reading the news, funding had slowed down quite significantly in Q2 last year in the US and many other markets, and everybody had heard that the Middle East has a lot of dry powder. A lot of people, every week, we're getting calls from international funds flying out here. We want to spend a lot of that money here. Our expected portfolio value just in the next couple years could reach up to $2 billion just across the startups and the funds that we've invested in and their portfolio companies. Our team is diverse already, and we're continuing to diversify it. We have almost 40% female representation on the team across 10 nationalities. It's something, the D&I part, but also part of ESG in general, is something that we were focused on from the beginning. In 10 years' time, that AUM, that $1 billion we may raise, or the appreciation of the assets we've invested in, we expect to reach around $7 billion in just a short period of time. We expect to be at 180 portfolio companies, and an expected return of $27 billion across these 55 funds and 180 companies. I personally have a hard time looking at numbers like that because they seem pretty ethereal. But this is based on a very conservative approach of a 2 to 3x return on investments, just like the market shows, and counting deal by deal in our forecasts and our model up to that point. We spent the first, I think, 6 months with our steering committee just building a portfolio construction model that accounted for everything. We tried to be very thoughtful about being complementary to the private sector and not cannibalizing efforts of the private sector. If you know me, you know that I was always very concerned about tech transfer, big tech transfer, because we're building so many seedling baby startups in the region. If we roll out the red carpet for some large tech company to come in, what does that mean for these small companies? But now, I'm starting to worry about that less because there's so much swell happening in support of early stage startups. Of course, we still have a long ways to go. But these numbers were really based on a bottoms-up analysis of what we can actually do together. That creates approximately 185,000 new jobs in just the 10 years. You can read any report about what venture capital's impact is on the markets that it plays in. In the US alone, Hillary Clinton, I think, was the one quoted saying this, 90% of net new jobs in the US, which is a mature, diversified market, come from SMEs and startups. 90% of net new jobs. Imagine what happens in emerging markets and nascent markets when startups start to flourish. This contribution, just from the efforts of the fund and the underlying VCs and startups effort underneath it, would create or contribute another $20 billion to the Dubai economy alone. Next slide. This is the great team that I have the pleasure of working with. I'm grateful for all the effort they've been putting in over the last year and a half, but especially in the last 5 days. So thank you. Join me in just giving them a round of applause. Thank you, team. And of course, we couldn't, next slide, please. We wouldn't have been able to do this without our leadership. I mean, we call them leadership. They're governing the fund with us, but really, we do everything lock and step with them on a daily basis, and they've been there with us despite, how busy they are. So we have our oversight committee, which is led by His Excellency Minister Olema, and the governor of the DIFC, Isa Kazem. And then we have our board of directors and our investment committee. So we have a pretty robust governance structure already, but this is really stage one. As we move into the second phase of funding, and we're regulating the fund currently, we'll be adding more governance and different members of the board and these different committees that govern the fund. So it's really trying to set a foundation for a very institutionally run fund with the speed and rigor and excitement and innovation of a private sector-based fund. I think that's why they hired me. But next slide, please. All right, so I meant to say thank you very much for bearing with me on that. I hope that uncovers a little bit about what the fund is about.